Hey guys, welcome back to another video. So we're already starting off March with some volatility. So today we had the futures down in the red. The futures were deep in the red. And then as soon as the market opened up, the market recovered. It took a little while. I think it was early in the morning, the market started recovering. And why this is dangerous is because you could hop into what's called puts, and puts are options that are betting against the market, and then the volatility comes back and gets you. Volatility is when the market goes up and down, it moves fast. And one thing that you want to take note of, guys, is follow the VIX. The VIX hit 23 today, is now at about 21.4. I expect that tomorrow it will go back up again. And what I've noticed is that most of the time on Mondays, Mondays are up days, even when the market starts off sometimes in the red and the futures are down, we can still have a green day on the market. Just for some reason, the buyers come in and sit over the weekend. They look at the news, they assess the risk, and on Mondays, they usually have a good day. But people jump in, they get into the next day calls, they want to do short-term trading. And a lot of times what happens is on Tuesdays, it's a down day. So Tuesdays are probably the day that I've seen go down the most, where I've seen the market be super green on Monday, and then I know that the market is overbought. I know that there is market conditions like could be a war, inflation, announcements going on, data coming out. And most of the time, it's Tuesday that the market pulls back. So today it was a little bit different because we had a couple stocks I'm going to read off on my list that were up today. So MicroStrategy, that owns Bitcoin, was up about 6.23% today, which is shocking because Bitcoin, it has been down and MicroStrategy has been selling off. But the MicroStrategy was on the up list today. Northrop Grumman, of course, which is close to me in that Falls Church, DC area, they were up today. They're a defense company. So, of course, with the Iraq bombings, the wars going on that could possibly be going on, defense is a sector that is now going to be rewarded. They're going to be probably having some stocks that are going to do pretty well. Also along in the defense space was Palantir. And Palantir, it went from just 3 months ago, 195. Now it's at 145. So I'll say if you like it at 195, you should like it at 145. I believe it's been also in the 130s. I would like to catch Palantir around 130, 125. I would say that I would consider buying around 140. It's not a bad price. And then, of course, because oil prices spiked, Marathon Petroleum is up about 5.86% today. So I was watching Exxon, which I thought was going to skyrocket today, which it didn't. I believe it kind of went down. I saw it just kind of flatline, and so I did not jump in, but I was considering that. And then something else that I saw, Amazon. Amazon is down about 15% in the past 3 months. A lot of people are saying that they're getting out of Amazon. They said that big investors and institutions are selling to Amazon, which that's okay. I don't want to follow the crowd. I'm going to be a buyer of Amazon. The reason I'm going to be a buyer of Amazon is because I see the data center space and the places that I'm in. I've talked to people that are in the data center space, talk about the cloud, and the people that work at AWS, and I just hear about what the growth potential, what they're doing. To me, Amazon is like a new conglomerate that's newer than Berkshire Hathaway. They have so many things going on. They make money so many different ways. So Amazon is a company that I have been holding, and I'm going to continue to hold. I recently bought some more Amazon. I think it was around $200 or $199. So even though I see the reports of and big investors dumping Amazon, I'm still going to hold on to Amazon. I'm not going to sell it. Another one I'm watching is NVIDIA. NVIDIA in the past year has went from 86 was the low to 212. Right now it's trading around 182. But the thing about NVIDIA, you have to remember, is they have about a 50% net margin. So that means that out of the money they make after they pay the taxes, the expenses, everything, they have 55% net margin, which is crazy to me. I think anything that's above probably 20% margin is good, but they are at 55%. And they are currently sitting at a $4.43 trillion market cap valuation. So to me, this is a strong company that I think has a back order that will continue to do well for years. So even the XLK ETF, these tech stocks, they've sold off some. They maybe present a buying opportunity. I'm not telling you guys that you have to buy right now, but if you see fit and you want to, that comes to your price, and you want to get into Apple, you want to get into Google. I think Google's down today, and you want to get into some of those stocks, definitely take a look at them, put them on your watch list. Google's at a 305 today. I see that Google is in the after hours at about 305. Google's another one that was just on fire. The stock was tremendously climbing, just like Apple. Now we see those stocks are coming back. They're pulling back a little bit, which doesn't mean that they're dead or these companies aren't good or valuable. It just means that this is the opportunity that you have to buy. If you want to buy the stock, if you like it at, let's say, Google at 350, now it's at 300. That's the opportunity, and you should always have what we call dry powder sitting on the sidelines. Dry powder is extra money that you have, whether it's from a side job, whether it's from your second job, whether it's from overtime money, whether it's from your business. It's money that you decide you're going to set aside every week, every month, that you're not going to touch. You're going to put this money in your brokerage account, and that money's going to work for you. So that way, what I've learned early on is that when you have the dry powder money sitting in your account, when the market pullback comes, you already have the money available. So it doesn't matter if this dry powder is, let's say, $10, $15 a week, $20. That's pretty much eating out what you would spend at Starbucks or Raising Cane's, Chick-fil-A money. You can just take that money, set it aside, and if you can in any way automate it. What I have found is that I made the best market decisions, investing decisions when I automated the money. I didn't even think about it. The money would just come out of my account, going into my brokerage, and then on times of turmoil, when the market dips down, we have volatility opportunities. Sometimes it doesn't last long. It could be a few hours, it could be a day, it could be a few days. So if you have to transfer the money, then you could potentially miss out. So you want to always keep your dry powder loaded, keep your money there that you can put into the market. So this week I'm going to be watching Palantir, and I'm going to be watching Amazon. Now what I may do is get into Amazon for the long run, and I may get into some Palantir for the long run. And I'm also watching Robinhood, because Robinhood has pulled back so much because, of course, they work in the crypto space. As crypto's doing well, people doing a lot more trading, more buying and selling. So Robinhood, it does well. But right now, Robinhood has pulled back. I recently saw that there was some buying, but Robinhood is now sitting at $78, and the 52-week high is about $150. So you're looking at nearly a 50% pullback on Robinhood. So if you believe in that company, I'm not saying that you should buy it at $78. Pick your price. For me, I have to get it around 65 to 70 ranges. So ideally, I like to buy it. So Robinhood is something else I'm going to be watching this week. The XLE Energy ETF is one of the ETFs that you can probably keep an eye on. I think I'm trying to make some short-term money on that this week, because with, like I said, with the oil prices, the energy, all the energy stocks, those seem to be where the money is flowing. You'll see different sectors, different weeks. The market will tend to flow one way or the other, whether it's tech, because NVIDIA or somebody had good earnings, or if it's the oil space or energy because we think there may be a war, or because there are some bombings and we have limited access to oil. So there's always opportunity in the market, but make sure you guys are automating your investments. Make sure you're putting some dry powder aside. If you guys have any questions, stocks you'd like me to break down, please let me know. I'm going to be looking at some margins of companies, letting you guys know what companies are moving, what I see in the market, and what I'm watching. So if you guys like this video, you like more like this, please subscribe to the channel, and I'll see you guys next one. Thank you for watching. Peace.